Hello, my name's Curtis Mangus, and I'm a 30-year mortgage industry veteran whose specialty is the government's home equity conversion mortgage, also known as a reverse mortgage. And today we're going to talk about the common misconceptions, loan criteria, benefits, and counseling that's required to be able to obtain one of these loans. First of all, I want to talk about the misconceptions that people commonly hear. First of all, the bank does not own your home if you take out one of these loans. It's still your home, you're still on title, it's your property, and you're free to do with the home as you wish, just like any other loan. You're free to pay off the loan at any time, and you're free to sell the property and keep any equity that is left, just like any other loan. So you're not signing over your equity to the property, to the government, or to the bank. It is still your house. First of all, it's also not possible to outlive this loan. The loan is due and payable on your 150th birthday, so when you take out one of these loans, you don't have to worry about it becoming due and payable during your lifetime. Also, that somehow the government or the bank can force you to leave your home. First of all, typically when the bank forces someone to leave their home, it's because they've defaulted on their payments. There are no payments on this loan, so that takes care of the biggest misconception that people have. Borrowers are just required to pay their property taxes, their homeowner's insurance, and general upkeep in order to be able to stay in the property. There are no payments required. Also, there is no way for the debt to pass on to your heirs. This is what's called a non-recourse loan, which means the only recourse the bank ever has to recoup their principal and interest is to sell their property. However, when the loan becomes due and payable, which we'll talk about later, it is always the customer's or the heirs of the estate's option whether to sell the house, pay off the loan with other assets, or to go ahead and let the bank take it. And so it's totally up to the customers or their heirs or estate on how to repay the loan. What are some of the benefits of a reverse mortgage? First of all, you do stay on title. As I said, it is your home to do as you wish, and you can sell the property or pay off the loan anytime you want. It does double your buying power, however, which is a huge financial benefit for seniors when they want to move and buy a different type of property. The biggest advantage is, of course, there are no payments due on this loan as long as you live in the house. It is a government loan, it is insured by the Department of Housing and Urban Development, and it is a great way to diversify your assets and not have all of your money or a lot of your financial assets tied up in a house. The loan does require counseling. It is required by FHA. It is there to protect the borrower, to make sure they understand the terms of the loan and that it is a benefit to them, and it does provide an important level of credibility to the program, and it is a nice safety net for the senior. What are the requirements? First of all, you have to be 62 years of age or older in order to be able to qualify for the loan. If it's a couple, at least one of them has to be at least 62 years of age. It has to be your primary residence, which means you must live in the property at least 6 months of the year. It's fine to have a second home, it's fine to take vacations, but you do have to have it as your primary residence and live there at least 6 months of the year. We have to be able to document the down payment and the closing costs. That is a loan requirement. And we do have to go through what's called financial assessment, which is underwriting to make sure that you do credit and income qualify for the loan. When is the loan due? When does it have to be paid back? First of all, when the property is sold, it has to be paid back just like any other loan. If you've stopped residing in the property for 12 continuing months, it is then due and payable. When the last owner on title is deceased, or if for some reason the property taxes and the homeowner's insurance have not been paid. Notice there's no reason that it brings up about payments being due, because there are no payments due on the loan. The typical uses that we see on a purchase is downsizing to a smaller home. Sometimes they're upsizing to a better home, relocating to be near family members. It is a great way to double your buying power. It's a way that you don't have to pay cash for a house and still not have any payments. So it is a great financial planning tool, and it is a great way to preserve and improve your liquidity in your retirement. What are the main benefits of a reverse mortgage, of a home equity conversion mortgage? First of all, no monthly payments are ever due on the loan, which is of course a great benefit. There is no prepayment penalty. You can sell the house or pay it off at any time. It enables you to not have to pay cash for a house. You only have to put 50% down approximately, and that's based on age. The older you are, the less you have to put down. If you're in your late 60s, you have to put down about 50%. If you're up closer to 80, it's down closer to 40% down, and that is your down payment and your closing costs combined. It enables you to keep other reserves liquid, because the problem is if you pay cash for the house, you've lost the access and the use of that money. If you want to buy a $200,000 house and you pay cash for that house, you've lost the use of $200,000 of that money. However, if you take out a reverse mortgage and you put $100,000 down, you still have the ability to use that other $100,000 in your retirement, which can be very helpful for people on a fixed income. It is a non-recourse loan, which means the only recourse the bank ever has is to sell the property. They can't go after your heirs, your estate, any other assets you have. And of course, the heirs or the estate always have the option of selling the property first. And you can never owe more than the house is worth. How does it work on a reverse mortgage purchase? The loan amounts available is based on the age, the home value, FHA loan limits, and current interest rates. The down payment is basically required as the sales price minus the loan amount. Typically it's about half. And no payments are required on the loan as long as the homeowner lives in the house, pays their property taxes and insurance, and maintains proper upkeep of the property. So let's recap the advantages of a reverse mortgage purchase. First of all, please remember this is a regular government loan product. It's in a way that you can double your buying power. There are, of course, no payments due on this loan ever. It's a great way to maintain more cash for your retirement. It's still your house, you're still on title, and it's still your equity. You can sell the house or pay off the loan anytime you want. And it's a great financial planning tool to help you in your retirement. So we hope that this video has helped you understand how this loan works, and hope to be able to meet with you soon to talk about your specific circumstances. Thank you for watching.